and welcome to Joyrip Daily News. My name is Hannah and here's the news today. Swiss Steel Group has launched Green Steel Stainless Plus, a new stainless steel variant that meets high ecological standards. Green Steel Stainless Plus is notable for its corrosion and heat resistance, excellent mechanical properties, and non-magnetic nature, making it ideal for construction, automotive, household appliances, medical, and aerospace applications. The production of this steel uses the ferroalloys and relies heavily on electric arc furnace technology, allowing the use of scrap as the main input material. DGTR, a subsidiary of Swiss Steel Group, achieved a 77.4% recycling rate in 2023, using both new and old scrap. Green Steel Stainless Plus is produced with over 95% recycled material, in compliance with ISO 14021. The Directorate General of Trade Remedies, India, has proposed continuing the countervailing duty on welded stainless steel pipes and tubes from China and Vietnam. The recommendation follows an investigation indicating that lifting the duty could harm the Indian industry due to potential increased imports. The investigation found that Chinese producers, facing excess capacity and reduced domestic demand, might target the Indian market. The duties initially imposed to counteract the subsidized import aim to protect the local manufacturers from financial losses. The final decision will be made by the Finance Ministry. The aluminium monthly metals index rose by 4.09% from May to June. Aluminium prices increased by 5.28% in May, peaking on May 25 before falling over 9% in June as investment funds fall back. Fears of copper shortages drove this initial rise, but with no actual shortages and stable interest rates, the rally ended. China's production surged, worsening the oversupply. Western countries imposed higher tariffs on Chinese aluminum and EVs, yet Chinese imports to the US have increased. Despite the decline, Korean aluminum sheet and coil prices saw significant gains along with the increases in the LME and Chinese primary aluminum prices. In recent trading sessions, LME aluminum prices saw declines across various contracts, with the cash bid and official settlement prices dropping by $8 to $8.5 per ton, respectively on Friday, June 21st. The 3-month bid and offer prices also decreased by $5 per ton, while December 25 contract dipped slightly. LME aluminum's opening stock was reported at 1,055,425 tons, with live warrants at 466,575 tons and cancel warrants at 588,850 tons. Concurrently, the 3-month Asian reference price rose marginally by $5.84 per ton. Meanwhile, the SHFE aluminum prices on June 24 recorded a notable decline of $16 per ton in benchmark price, with the most traded SHFE 2408 aluminum contract closing lower at RMB 20,435 per ton, down 120 RMB per ton from the previous section. According to the World Bureau of Metal Statistics, nearly 97.5% of the world's refined nickel production was consumed from January to April 2024, leaving just 2.5% as surplus production, approximately 31,000 metric tons of nickel. The specifics of whether the surplus involves Class 1 or Class 2 nickel were not clarified. Despite the indications of surplus, the actual availability is questionable. The London Metal Exchange stocks, particularly of Russian nickel, have been stable at around 24,500 metric tons, representing 34% of the total LME nickel stock. Recent bans on trading Russian nickel after April 12, 2024 have further complicated the situation, leading to calls for a correction of inflated LME inventory figures. Class 1 nickel with 99.8% up nickel content is not sufficiently available due to the production issues in key regions like New Caledonia and Indonesia. The International Nickel Study Group has already reduced its forecast for nickel surpluses, and the Goldman Sachs analysts predicted a deficit in nickel availability starting in 2025. The perceived surplus may be part of speculative strategy to purchase nickel at lower prices before a predicted shortage emerges. Despite the talk of the surplus, the actual oversupply of nickel is minimal. Vallourec finalized a 2-year extension to its 2019 contract with the national oil company of Abu Dhabi, originally valued at approximately $900 million. From January 2025 until January 2027, the extension broadens the scope of supply to include new services such as local pipe coating and digital solutions like television for enhanced installation operations. Under the extended agreement, Vallourec will continue supplying a comprehensive range of tubes and connections for conventional and complex applications onshore and offshore oil and gas fields. The company has also secured a significant new order for 27,000 tons of tubes, which will be manufactured across the Vallourec's premium production hubs in France, Brazil, China, Indonesia, with deliveries commencing by the end of 2024. Thank you for choosing JoyRip to update the information. See you in the next video.